Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With us again this week is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, let's start first. We've got a lot to talk about today. Recap what happened in the markets on the livestock side this week.
Yeah, I think when you look across the board, we've been fairly flat on livestock prices. Cash hogs maybe down 50 cents for the week. When you look at the pork cutout value, again, basically flat, I would say. Pork bellies down another $8 relative to a week ago. The rest of the cutout actually helped support, so we were flat on the overall pork cutout value. We are seeing some nice increases in that choice beef cutout side. We were up over $4 this morning in terms of that choice beef cutout. We're up $6.83 for the week. Led in large part by what's been happening on the loins side. If you look over the last 3 weeks, loins have been up 25%, and you look at the overall cutout value, and it's been up about 14%. We're up pretty strong in terms of fed cattle today, up over $3, and feeder cattle mixed for the week, but fairly flat.
All right, so we had a pretty big day report-wise yesterday. Let's get into those and start first with WASDE and an update on there. And we also saw South American numbers too, which were a little bit surprising, I'm assuming, coming from USDA.
Yeah, absolutely. If you look at the crop side of the ledger for a minute from WASDE, we did see USDA revise exports down for many of the crop side in the current year, which meant lower prices. And I think we've seen corn and soybeans both be lower as a result of the report that we got. But at the same time, we also got some changes on the livestock side of WASDE as well that would suggest USDA is becoming more optimistic as we go through 2017. If you look at fed cattle in particular, they added $5 to the range on fed cattle prices relative to February. So a nice pop, but as well, hogs and chicken, they also revised upward. So it looks like to me they're seeing also some stronger demand signals starting to increase their estimates for prices in 2017.
Scott, as we look at those numbers that come out of South America on the crop side of things, how does that impact maybe the direction as we get closer to planting season getting fully underway in the Corn Belt? And what does that mean potentially for the bottom line for livestock producers?
Yeah, so I think number one, we're going to continue to see producers watch very carefully how this unfolds over the next several days in terms of their planting intentions. I remind us that USDA has probably already sent out a lot of the survey work relative to planting intentions, and some of those decisions in terms of what they expected to plant will have already been turned in from a survey standpoint. But we're going to continue to see a lot of struggle between corn and soybeans, and I keep reminding folks that this early spring, I've seen a lot of anhydrous go on that certainly may be helpful to getting more corn acres, all else equal. But from a livestock perspective, I go bigger crops, lower prices, good for feed costs for livestock producers, and beyond that, if you think about the risk side of that equation, it just means we're likely have a few more stocks to deal with if we were to have a dry situation or a drier situation in 2017. So it keeps the risk from crop prices going much higher, lower than maybe we would have thought of just a few reports ago.
And we'll talk a little bit. We got export data also yesterday, and we'll get there in just a second. But jobs report came out this morning, and a pretty solid number. And I would assume that that's got to mean good things for domestic demand as well.
Yeah, so 235,000 new jobs out of the jobs report this morning. So we continue to see now back-to-back really two good jobs reports. I will say, when you think about this from a meat perspective, it's nothing but good. Again, I'll come back and say 3% more meat supplies in 2016, 3% plus more meat supplies in 2017 means we got a lot more meat that we're going to put on domestic and international markets. And getting a good jobs report out again just suggests domestic demand for beef, pork, and chicken might be stronger than we otherwise thought, and is a good situation to keep producer prices higher as we go through 2017.
The other end of that demand spectrum is exports and international demand on the global market. Export data came out. We have January's numbers. What can livestock producers take away from that and what it means for them going through the rest of this year?
Yeah, so number one, we're getting a lot of strength on the export side. The more data that we see to give us a sense, we finished 2016 really strong, and we've started 2017, extremely strong. When I look at year-over-year growth out of that January report, we can talk about beef and pork exports out of the United States up about 200 million pounds relative to a year ago. That's 200 million pounds that we don't have to deal with in this country any longer. And again, I think has been very supportive to prices. When you look at that relative to just, let's say, a couple of years ago, we started 2015, where we'd have actually seen beef and pork exports that were about 200 million pounds lower than the previous year. So it just reminds us that the strength we're getting in export markets, despite what's been a stronger dollar, we talked a lot about the dollar strength hurting exports, but now it tells me we're getting some shift in terms of demand for U.S. meat from the rest of the world. Let's hope that continues as we move through 2017. And it is important to remind us that price matters, but also income growth in other countries that maybe is shifting that demand for U.S. meat. I guess when we look at beef and pork and chicken as a whole, I like to remind us all the time that you stack together beef and pork exports, and they're only slightly more than the amount of chicken that we export out of this country today.
And you bring up a really good point, because we had another outbreak an outbreak of avian influenza, high-path avian influenza in Tennessee. We saw a case of low-path in Wisconsin, and a second break of low-path in a neighboring county to that one in Tennessee where the high-path broke. As a result, we also have seen a stoppage in exports to certain countries. South Korea is one of them. What does this mean potentially for the poultry, the chicken meat product? But I think about the egg market that we just signed on to a couple of months ago.
Yeah, so I think when you look at what's been going on in South Korea, eggs is the first one that comes to mind for me when you realize that we were just in a situation where we were hopeful to get a lot of surplus eggs in this country going to South Korea, and we now know that's all stopped for the time being. The high-path AI case has certainly created a number of countries saying they're going to restrict trade from us, but when you look at the list of over 30 countries so far, most of them have taken a county level approach at it, so it really hasn't had that much effect. I like to remind us that let's hope we've seen our last case of high-path AI, because I'm afraid if it spreads over the next few weeks and we see more cases start to crop up, a lot of those countries that did in fact only put some type of county or regional ban on will expand that. And that's where we could get into a much more serious situation as we look ahead. But it seems to me right now, when you look at South Korea and eggs in particular, that's where we're going to see the potentially biggest effect. I do worry when you think about this case setting in Tennessee, how close it is to a lot of chicken production that does go on in this country. And again, if you talk about any kind of spread, which so far, no signs that we see that happening, but if it were to occur, we could see a much bigger impact on chicken than maybe we saw in the last AI outbreak.
And one thing to note about this outbreak that was different than some of the others, we saw it in the turkey industry before, we saw it in the laying industry, and this is the first time it's been into the breeding or the broiler side of it. Does that make us a little nervous about what happens to poultry markets because we're in the start of that potential high risk or increased risk season?
Yeah, again, I think my hindsight's going to be 20/20 here in a few weeks, Meghan, in terms of whether it has big effects or not. It all comes down to, is this one case that we're going to have to deal with? And if so, I think the impacts on chicken markets will be, frankly, very small. But if we do see it spread, and I think there's certainly that concern that we're not done. But thus far, we haven't seen any spread. So we'll hope that's the case. But if we do see a lot more cases, I think we could see much larger effects on the chicken industry this time around than what was really a turkey and egg situation with the last round of high-path AI we had in this country.
Scott, on the flip side of that export report, we also saw imports coming into the U.S. How does that relate to other months and in comparison?
Yes, we are seeing less interest in our markets on the import side as well. I think you can start to look at a country like Australia, who has record cattle prices today, by the way, very similar to the levels we saw back in 2014 in terms of being record levels for them. And their interest, I think, in shipping product our way is less than it was a few years ago when we had our record high prices. So we're seeing help on both sides of that equation, if you will. A little less import strength coming in, as well as gains in exports, means in net we have less product to deal with here in this country.
Another, I guess, we've seen all of these reports, the devastating reports coming from out west and the wildfires. As we look at that, the impact that it could potentially have, or it will have, on livestock producers in that area. We've seen the personal side of it, but really there's livestock and that the business side of it too that's yet to be figured out.
Yeah, so it is absolutely a catastrophic situation that we've seen unfold there with the wildfires in a number of key beef states. I continue to remind folks, make certain as we accumulate those cattle losses that we do document those losses. I know that we'll have the Livestock Indemnity Program, or LIP as we like to call it, available to help make payments for producers that have been affected by the wildfires. I know we've lost a lot of cattle in those areas. I at this point don't expect we're going to see huge impacts in terms of market impacts. And again, I don't want to minimize. I know how tough it is for those that have been directly affected, but I'm just not certain that we're going to see a lot of national effects as a result of the wildfires, at least what we've seen so far.
And obviously our thoughts and prayers go out to all of those families that are fighting that. But and I know it has to be difficult to go through that at the same time, but is that where our record keeping and keeping that mentality also to think about it from a production standpoint need to come into play as well? Absolutely.
As much as I'm sure we're focused on anything other than business right now, it is important to make sure that we have the adequate documentation that we need. The last thing I want is for folks not to be able to take advantage of the programs that are available in cases like this. And if you think about the scope of what folks are having to deal with right now, many acres where we're going to have to go around and find animals that have perished as a result of the fire. And that's just not a fun situation. And the last thing you want to worry about is documenting right now. But it is important from a financial situation to take advantage of the programs that are going to be available.
Scott, to kind of as we wrap things up this week, questions about I've been asked questions about the disconnect between cash cattle prices and futures prices. So as we look at cash cattle prices today and maybe near term in the futures market and a little bit out, how does that all relate, and what do producers take from it?
Yes, I do think we have seen situations where maybe futures prices people feel like have been a drag on cash cattle prices. If we look where we are today, cash cattle setting at roughly $1.24, and the first contract we can trade on the fed cattle side is April of this year, and they're setting at about $1.17. So it tells me one of two things have to happen as we go through the next few weeks. Number one, futures have to come up to start to meet cash cattle a lot closer, or cash cattle prices have to come down to meet futures. And I know that's the last thing we want as producers, is to see cash markets move lower. But I do think we'll see some convergence of those as we move through the next few weeks. That's kind of the short term of that issue. I know there's longer term issues that set out there. If you go all the way out to some of the further out traded contracts, it can become a little less optimistic for us, of course. June 2018 fed cattle futures closing at about $97 today. That's a far cry from where cash markets are. It would remind me, however, that I think a lot of folks are worried about the downside risk in cattle markets as we go over the next 18 months. And we can talk about increased cow numbers, concerns about just the amount of beef that might be coming to the market, things like exports, how do markets respond. We could have a Mexico discussion yet again in terms of whether trade with Mexico starts to create problems. But it just again, shows me there's a lot of folks that are worried about the downside risk in these markets today. We'll wait and see where those longer term prices go as we move ahead. But that disconnect longer term is certainly folks who see the risk in prices relative to where we are today.
Anything else this week, Scott? Anything to look forward to next week?
I think we have a fairly quiet week next week when we look at markets. We'll get consumer confidence out next week, which we'll continue to be curious about. But that's really the big report that we have. And before long, we're going to be able to talk about planning intentions here at the end of the month, and that's certainly going to set the stage for just where we talk about feed prices for the remainder of 2017 and 18.
Just 3 weeks away from USDA's prospective plantings report. Scott, have a great weekend. Good to see you.
You too, Megan.
If you'd like our market information, or if you'd like market information twice a day, you can subscribe to John Perkins Market Minute. Go to brownfieldagnews.com. You can also subscribe to have our weekly livestock market update delivered to your email box every Saturday morning. And brownfieldagnews.com. Click subscribe. Send us a question or comment if you have those as well. Have a great weekend. I'm Meghan Grebner on Brownfield.